I think Mark
Awesome.
just said hit the like and share.
I love it. I
Frankie,
love it.
what do you got? What do you got
Well,
here, bro?
listen, I got to say before I dive into it, it was a lot of fun scanning today. I was one of those days where I was finding a lot of things,
Don't
and I
mess it
was
up,
able
market.
to quickly get battling back. I had so much fun, Maddie, that I was inspired by Coach Mark and Matt Reno, who was asking for trash that makes cash. He wants the return of trash that makes cash. I'm sure he's not alone. I found two. I threw them in the step channel. I'm not using them for Frank's charts, but I thought they were interesting. One of them's Figs, FIGS, and one of them is OPK. Both two little. They got volume. They're a little trashy, but they're looking pretty good to me, Maddie. So
It
they
started with a penny stock.
I
it
hate this
started with.
already.
I know you do. Listen,
I, I
shout
regret
out to
I
Mark and Matt.
regret this already. I so don't want to participate in trash that makes cash at
Well,
this
listen,
point.
I'm not. Yes,
Listen,
listen.
what
That's a Discord
trash? We're
conversation.
talking about trash in this market. This is an Apple Microsoft market moment. What are we talking about?
Everybody says
Trash
that
right
till
now.
Figs is joining the party, bro. So, but neither of those are my
Made
official
me think
Frank
of Fig
charts.
Newton.
Of course, it does. It sounds
It does. Give me
delicious.
one of those strawberry Fig Newtons, not that other one.
Yeah, not the actual fig. That's just
Yeah, no,
weird,
no.
right?
Give me the modified versions.
Yeah, I'm there with you. I am
All
there
right,
with you.
buddy.
All right, well,
Okay,
let's
you
officially get
first or
underway.
me?
Yeah, I'll kick off first
Okay,
here.
you go first.
I'm all right
Oh,
with
wait,
going
wait.
first.
Did you what do you got? Two bulls and a bear? Three. Like I
I
got
got
three bulls.
I
Like
got two bulls, and we'll see.
you found the one bear?
We'll see how it looks when
Okay.
we get to the
By the
last
way,
pitch,
can
right?
I just put my one bear I found on? Can I
Of
just
course, yes, of course.
alter?
I already cheated. Yeah, Mo is one
Yeah.
one of the ones that I have as
Yeah.
well. Really
It's
interesting look.
a pure technical setup here. And when we scan, me and Frankie guys, we a lot of times we don't even know what we're scanning. We're just laser focused on the chart,
Yeah,
right? And so I do my scanning, I write down the name, then I do my detailed technical setup. Altria was a decent one. Just wanted to put it on the radar.
absolutely.
Yeah,
Very cheap risk too, Maddie.
yeah.
So if I need to
Stop
add a
loss
little
right
bit of
under the 200
if I
here.
need to
Yeah.
add a little bit of bearish delta, this one's fairly
Okay.
cheap. So
I'll go two bulls and a bear. Altria is my first pick, though. No,
all
I
right. Well,
can't. I'm still going to bring three bulls.
all right, all right. I thought, I thought the same. Maybe I'll take,
Yeah.
take Altria.
Yeah.
All right, okay. So, but that's a good find. I do like that one quite a bit, Maddie. I'm trying to decide. I should have let you go first, but you know what? I'm gonna
I'll go
go.
first. I'm ready.
Yeah, yeah. Go ahead. Go ahead and
I'll
go
go
first.
first. All right, now I got to decide which one I want to talk about first, there, Frankie. I'll do the easy one. I'll do the easy one. I talked about gold last week. I've talked about gold all week this week. I'm going to talk about gold next week. I'll talk about gold the week after that.
I want to
And
go
I'll probably
first now.
talk. Yeah. So I'm just going to do this one really,
I know where
really
you're going.
quickly. Newmont Mining here. It was one of our picks from the scanner report last week. Brought it up on the rapid on the scanner report meeting, but we also talked about it in Frank's charts last week. And the one point I wanted to bring up on Newmont here that we didn't talk about last week is the more time here. Frank, you and I talk about
Yeah.
this all the time. The more time that you spend in pattern development, the better the pattern is.
Yep.
And the more consistent the follow through to that pattern will be. Oftentimes, everybody just wants a 1 day breakout and a 1 day hesitation. Give it to me now, give it to me now, give it to me now. And you and I are always preaching patience in pattern recognition, patience in pattern development here. And that's what we're seeing play out in Newmont Mining. You're seeing it clean up that resistance level. The patience plays out here. It allows that 9 EMA to continually put pressure on that breakout channel as you consolidate, even though you haven't given anything from a price level perspective. It's been hovering against resistance all week long. Well, what's the RSI doing? Just in that consolidation, the indicators will show you what Frank and I preach about here in patience and pattern development. Is despite the fact that you have not given an inch on the price, all of a sudden RSI is down, from mid 70s down to the mid 60s. And on a breakout, you don't have that sense. Even on an indicator perspective, you wouldn't have that sense that you're overextended going into the breakout. And so that when we're looking at some of these indicators, they're just kind of showing you what Frank and I talk about all the time. patience in pattern development. And then when you're looking at Newmont, once again, it's attached to the gold 2K breakout. There's no doubt about that. But you got some significant catch up here on the gold areas of the marketplace. And there's not just Newmont setting up out there. There's a few other gold stocks. I'm certain we're going to have a couple on the scanner reports. We'll probably have a gold stock on the stock report. We'll probably have one on the options report as well. Just a clean trigger. Give me a close above 49, and let's just do the dance all the way up to about 54 here, Frankie. The 9 EMA is obviously playing a role, so you're obviously going to use the 9 EMA as the gauge for the stop loss. The weekly chart does have a little bit of room to run before you work up into those mid 50 levels. You got the 50 period moving average right here. Something tells me, Frankie, that Newmont might not care about that on the 2K breakout there. So something to keep your mind on, kind of your eye right there on that 51.24 level. It's probably a zone to trail up a stop loss against the price action. But I do think this is a charge back into that 54 handle. So Newmont, my first pick, very similar pick from last week, but patience plays here, and patience in pattern recognition is certainly an important concept. Just wanted to bring it up here today.
Yeah, that is a beauty. That is a beauty. And when you started talking about gold, I was regretting that you went first.
I know, because you're like, which one? He's going to take mine.
Newmont was a good low hanging fruit. That's a beautiful chart. Love the sentiment behind it. 100% yes. 100% yes. I'm glad it's not Trademasters. It'd be like, I can't beat Newmont Gold.
No. If it was Trademasters, my next pick would be FCX, and my last pick would be a naked put on AMD. Let's go. That's a winner.
There you go. Well, listen, it's not. So I don't have to beat Newmont. I just have to join Newmont, and I'm going with RELY, Maddie. I'm going
pure technical here. It's good.
Purely technical. This is very much like the Bitcoin chart, in the last week and a half, 2 weeks, right? Got that nice quality, constructive consolidation, high base developing all the while. It's holding that 9 as that's creeping up. Hopefully that can give us that springboard through this resistance level, right about that, just over that $17 level. What I really like about this, Maddie, I mean, besides from the cleanliness of, it's really easy to build something when it's that orderly, right?
Yeah.
Which is always something that's really nice. I mean, they're in the middle of like super pocket, right? They have nothing from a moving average or a resistance level or pivot that stands out because
are charging here.
They got nothing to 22, right? 22, into that 22 range. I mean, there's just this huge window. I mean, and that's just not to say that that's your target, but when you got a window that big, it always makes me happy, right? I don't need to get to 22 to make this a good trade. That would just be really cool if it did that for me.
Listen, if the analysis leads to conclusion, that's what we do. Evidence to conclusion. That's what traders do. And 22 is legit here, bro. Like,
I mean, it's a legitimate area, right? I mean, it's aggressive. It's probably not a swing target, right? It's probably more of a
you might get a base in there or a flag, but it could get there.
Exactly. I think, when we're kind of setting up the target, I think probably a very sensible way to do it if you don't want to kind of swing that big is if you'll notice, kind of the range that we've been in during this consolidation period, that is oftentimes when I don't have price action and previous, resistance levels, support levels, moving averages that concern me, typically my go-to targeting methodology for at least one of my targets, if not both, is going to be the range that it was in prior to that break. Right. That range that it's in, that puts us right between about 16 and 17 as of late. Right. And so I think from a targeting point of view, if I don't want to, because let's call it what it is, it probably turns into more of a position than a swing to 22. Hopefully not. Right. But, it might take, some time to get there.
I could see a dance at 20.
So you could see a dance at 20. Exactly. And then a month from now, we got earnings right around the corner. And all of a sudden, this was post earnings. And I, in theory, had all quarter. I'd probably feel a little more comfortable with it. But knowing that, about a month from now, these guys are going to have their earnings. I like using the range for our first target. That just takes us, from that 17 into that $18 range for T1. And then I do like kind of two options. One, just, double the range, right? Going to 19. But I actually like being aggressive. I think this is one of those scenarios where you target, your target one, in this case, approximately 18, do a scale out there and let it run within that window. And I don't think 20, if we can get some momentum within that month or so that we have before earnings, is it's ambitious, but I don't think it's too tall of an ask. Yeah, we are going to need some momentum to get there probably, but I mean, these guys have had some momentum for quite some time, right?
Yeah,
So it's not like
I think 20 is legit. I think 22 is legit. And
like
if you're
20.
targeting 18, you're very conservative.
Yeah, I
I'd
like
say
18
that's
for one.
extremely conservative.
I like
Um,
18 for one, kind of
yeah,
conservative on T1 and
yeah.
aggressive into 20 on
Yeah,
T2 in
I
this one
like it. I
personally.
like it. You know what I like about this one, Frankie, is I like I don't get me wrong, I like everything what you talked about here. I think it's a really clean breakout against that 17 with the simple trigger above 1730. But I like the long-term technical story, and the short-term
Yeah.
technicals is just kind of going in conjunction with that longer-term technical story. Reason IPO, and I've told this story many, many, many times. So if you've heard the Facebook, hate went too far story, I apologize. But if you recall, one of the most popular IPOs of all time in 2012 was Facebook. Now Meta, obviously one of the more important stocks to the entire market right now, and doing some really good things technically right now on their potential breakout. But their initial IPO went from 38 to 18 in like the 3-4 month time frame.
Yeah.
Got absolutely smoked, got absolutely just beat up. And I remember saying at the time, don't touch this IPO because it's one of the more popular IPOs in recent history. Everybody and their dog is going to want some shares, and Wall Street's going to be more than happy to sell those shares. And so, but I remember making a statement after the market started settling into the 18 to 22 level. I remember saying after an extended base in the market, listen, the hates probably went too far on Facebook. And after that, you saw a reversal, and it just, went gangbusters, just absolutely amazing. I'm not saying this stock's that storyline. I'm
Right.
saying
But
the
yeah.
technical storyline is very similar to me. And it's something I've seen in not just Facebook, but many, many, many IPOs in the last 10 to 15 years, where there's a lot of just absolute froth coming into the IPO market. But for one reason or another, these IPOs just get priced way too high, way too high. And we don't need to talk about the why they get priced way too high, but when they come to the open market, they're typically overvalued upon entry into the marketplace. And what you're seeing here is that the hate comes aggressively. Now, obviously, we're talking about some tough economic and technical environments. Whatever the causation of that downward movement of price is not important to me right now. What is important is you went through a 6, 7, 8, 9 month time period where you didn't do anything. You consolidated, found a foundation, you built a house on that foundation, and now you're turning that house into a nice little skyscraper because you got a foundation to build something upon. And so I just like that intermediate to long-term technical story playing out in the short term, and you're just attaching yourself to that next great pattern within that longer term technical story. So I just wanted to bring that up there, Frankie.
Yeah,
I
love
like
it.
the pick a lot there. Let's go. My second one here. Yeah, I'm just gonna do it. I already talked about it. It's Meta. I like comms. I like comms. Comms, one of my favorite areas of the market, broke it down in quite a bit of detail yesterday. It's not an aggressive move happening in all of comms, though. It's the leadership of comms that is really, really, really good right now. XLC breaking out here today. Good candle on XLC. Talked about the potential breakout yesterday. We're getting it here today. I'm going with Meta here, Frankie, because I just like the simple trade here. You're getting it Meta on the one day of the breakout. We're looking at entry above the high here. Stop loss. We're always going to gauge the 9 on a breakout this tight against the 9. So we're always going to gauge the 9 here. Stop loss underneath the 9. If you want to be a little bit more conservative position style trading, stop loss would probably be underneath 200. What I'm looking at here is just a real simple journey up to that green line here, Frank. That's all I'm saying. I'm saying Meta breaks out and goes to that green line 230, and that gives us a 20-point window, which is a nice little 10% movement on Meta here with the stop loss underneath. You could even go 2-1 with that target. You can even be 2-1 underneath 200. I just personally like gauging the 90 EMA a little bit more there, Frankie. So a real simple trade. Pretty simple setup. Entry above the high on the breakout channel. Stop loss gauging the 9, targeting the 200 weekly moving average right there at 230. Might have a little bit of a 220 conversation in it for a stop loss adjustment. So if you want T1 at 220, T2 at 230, that's probably the proper setup there. So Frankie, I'm just going to go real simple. Meta, it will be on the option report. I doubt anybody's going to veto the pick. So expect it to be on the options report. And I like a bull call spread on it.
Yeah, I think that makes a lot of sense. Yeah, I mean, listen, what do you say to that chart, right? You just say, thank you, chart. I'm good.
Thank you for being clean.
Thank you for being nice. The one I'm going to go with next isn't super different. It is different, but it's got some characteristics that are the same, and that's Okta, OKTA. And I think when you look at Okta here, you start on the weekly. The weekly is what solidifies this for me. We got the weekly pinch, right? That nice little high base. If we can break through this, a relatively clean path into that big round $100 level. So we've got a target zone that we can work with. When you look at it from a daily and entry perspective, I think there was really two ways to look at it. You can kind of look at it at the channel break, right? That would have got you in, and maybe it should have, yesterday or even today. A little more aggressive, right?
Yeah, you're a little tight there.
But I think if you just are saying, hey, look, I got plenty of things that could trigger on Monday morning, that's not going to be a problem for me. This one, I probably wouldn't want it to be Monday morning. Maybe Wednesday morning would be a little nicer, because I think you do want to kind of take out the high there, because that confirms that weekly, right?
Yeah, I think so.
I didn't mind a front run, but you had to play the channel break, right? And that ship has sailed, right? So whether it was a good idea or not doesn't really matter anymore. I think we want to get that confirmation above that top candle on that weekly, because that's where this story is really being told, right? And so probably not a Monday morning type of a trade, but a little bit of drift into
radar for next week.
Probably it doesn't even have to be next week, really. It just could be one of those. Well, it might be with the short week, but could easily be one of those back halves, right? I mean, if this just drifts a little bit, that 9 works up, it's not going to be overextended. If it did break out on Monday, it wouldn't be that overextended, right? So it's not like it would be invalid if it broke Monday. It's just I would rather it maybe broke Tuesday or Wednesday, but take out that high of that closing of that 50 weekly. You've got a little bit of junk around 94 going back into, way back machine. That might be a sensible place for target one, but I think ultimately you're looking at that big round number. There's nothing really significant in my opinion on these guys. They've been there. That's why I do kind of like that 94 is my first target. There was a couple bounces back in the day. You're going way back into like 19 for that. But really, I think the real target, if you will, Maddie, on this for me at least is 100. And that's kind of where you're looking to go. And as long as your stop loss is below the 9, I think you're fine in that regard. We talked about in the webinar I did on Monday night, kind of getting as much as we can on our stop losses on these breakouts, right? I'd love to have the 9, the candle that leads to the breakout, the swing that leads to the breakout. We'll see what it looks like if and when I get to that breakout to happen. But that stop loss is a little open-ended right now. So right now I'm just going to say, hey, let's attach it to the 9, see what it looks like if and when it breaks.
Frankie, I when I'm looking at Okta here, it wasn't really on my radar. I didn't find it on my scan, so I'm kind of just looking through it right now. I think when you label something a pattern, it kind of tells you what you need to do from an entry. I got this as a cup and handle, and a cup and handle continuation pattern on the daily chart, a high base on the weekly chart. Both of them would call for a breakout of the upper end of resistance, and so I think your call out on the breakout of the upper end of resistance is really, really accurate here. I really like it above, and I'll just call out an 88, right? I'll just call out Michael Irvin's number. Let's just say 88 here. And so if you break out at 88 here, Yeah, you got some stuff in the mid 90s. There's no doubt, right? Old support, new resistance type concept. That old support does coincide with some other support in the past. So you do have some mid 90 conversation, but I think it's a journey to 100 here. The old adage, you break 90, you go to 100
Yep.
90% of the time. Whether that plays out or not, there's a reason there's an old adage there, because we've seen it a tremendous amount. And so I do think that, and it's not the 90 that is the interesting, it's the magnet at 100. It's one of those significant numbers in the market that just,
It's just a big
when the
number,
market
right?
is selling off, it comes down into it. When the market's going up, it wants to test on the upper end. It's just a number that constantly does stand out. Frankie, like that, we got some aggressive plays out there. I still like staples. I'm still a fan of consumer staples, but consumer staples is really elevated at this point there,
Yeah.
Frankie. See, when you're talking about those new entries here, consumer staples might be a little bit difficult. For example, Walmart, we brought Walmart last week on Thursday and Friday. Walmart, we talked about adjusting stop loss here. On this type of candle, yeah, you're still adjusting stop loss, but there's no new entry type conversation. And so when I'm looking at consumer staples here, I'm like, I really like the space, but I probably need it to settle in
I
a
need something.
little bit. My last pick is going to be in consumer staples, and it's for two different reasons. Number one, I do think you can bar by bar this bad boy on this type of breakout, but I also think you're chasing here a little bit with consumer staples being overextended and Church and Dwight now being a little bit overextended. The reason I bring it up here, Frankie, is for a specific pattern here that could transpire. And the reason I say that is because of the strength of the weekly chart here. You got a really good weekly chart, and you look like you want to dance up to 90, and then you know what? They want to dance up to 96. But two things. Number one, it certainly can be bar by bar. And if you bar by bar this breakout, which is what you have to do, whenever you hear somebody say, that's a bar by bar trade, well, that's because you can't gauge a stop loss where you typically want to. You're a little bit overextended against the price action. And so you can bar by bar with an entry above the high and a stop loss underneath the low. There's nothing wrong with that. That's just not my style. What I do like about this, though, is if we do get some degree of snapback in staples. Church and Dwight is rocking and rolling here today. And again, if it's a bar by bar environment, fantastic. I'll cheer on everybody. I'll be very happy for everybody, but it will leave me behind because I don't bar by bar very often. And so what I would like about this, though, is with consumer staples being overextended, I could certainly see some scenarios where next week we see a little bit of a fade profit taking session with consumer staples, a little bit of a base with consumer staples. And on either scenario, that most likely cleans up Church and Dwight and gives us a little bit of a better opportunity here. And so even though I can't really determine exactly where the trade setup is here today, because I'm calling for either some degree of 2-3 day base, which will allow us to be a little bit tighter on the stop loss, or a snapback coming back down into 87 here. And the reason I bring it up once again is you got consumer staples overextended. Church and Dwight is a consumer staple giant. And so what I'm looking for is consumer staples to do this little number a little bit, and that will clean up the top end of the chart on Church and Dwight, or it will give us a little bit of a snapback Cody special into 87. Either way, I like it. Just wanted to put it on the radar. Once again, it's a consumer staple pick. It can be bar by bar, but I'm looking at a very quick secondary pattern here, either a 2-3 day high base where we get a little bit of that 90 MA catching up, or two, give me that snapback here on Church and Dwight. What's your thoughts?
Yeah, I like it a lot. I had them as well. One thing that we can do in this type of scenario, Maddie, because really we like it. We think it's going up. But again, we don't want to put our stop loss, like the stop loss. It's the stop loss. That's the problem, right?
Yeah.
The good location.
Like if it was a tick play, a dollar stop loss, you don't care. Look at the skill here for the last like 5 weeks, you went from 80 to 88.
Yeah,
This is
it's
not
just
an
tough.
aggressive stock. Like,
No, it's not. It's not. This is one of those type scenarios where, if you are, I think you'd be patient. Don't get me wrong. I agree with you. Just let's let that next, whatever is next, let's
whatever's
let
next,
that develop.
quick.
But there's
Yeah,
never anything wrong with tinkering, as Mark would call it, right? I could scale in with a small amount on this bar
you
by bar
could.
candle and
You
hope that I'm
could.
complaining a week from now because I only moved in on 10% and I should have went all in, right? Remember, as traders, and not just specifically with these guys, but we have the luxury of doing that stuff, right? I don't have to be all in or all out. I can work my way in or out of a trade. A lot of times we're kind of, conditioned to think in stay or go, right? Yes or no type of ways. But
Yeah.
unless we're literally playing with one, which, I never do, right? That's why I have that. If you can't have, two, you can't have one rule in place. I was talking that with Dustin in Discord today, because it gives me that flexibility.
Yeah.
I like this as a radar candidate quite a bit. And it moved a
Awesome.
little. I had them on my list too. They just moved a little too much.
It's got a little too hot. It's got a
It
little too
did.
hot for me. But again, I thought it was significant enough to bring it up today, because
I would agree. Yeah.
I don't think it would have to like do anything. Like, if you're looking for that pattern here, look at Hershey's here. Okay.
Yeah.
Real strong move on the break, 3-day consolidation. Now we're dialing in a 255 breakout. That could be something really simple on Church and Dwight, right? Get 2-3 day high base, clean up the breakout channel, and then instead of putting a stop loss all the way down here, you're putting that fairly tight against the low of the base. And so I do think it can get cleaned up. Or if it wants to do a quick little Cody special 1-2 day snap back into resistance, believe me, I would like that a lot.